Hi, I'm Fred Earnest, President and CEO of Vista Gold Corp. We're delighted to have this opportunity to visit with you to talk about our company and what we're doing to advance Australia's largest undeveloped gold project. I will be making some forward-looking statements. I encourage you to become familiar with these. Let me first talk about our capital structure. We trade on the NYSE American and Toronto Stock Exchanges under the symbol VGZ. We have just under 103 million shares issued and outstanding, presently with a market cap of just under $100 million. We had $10.2 million in cash and short-term investments at the end of the third quarter, and we have no debt. In the lower left, you see the list of our largest shareholders. All of these shareholders have been with us for a lengthy period of time and over the last 5 years have added to their holdings. In the upper right, you see our share price performance over the last 12 months. We have a number of independent analysts and one bit of paid research. We're delighted to have this kind of following. You see their names and recommendations at the bottom. Let me start by just introducing the project and providing an outline for what we're going to talk about today. The Mount Todd Gold Project, located in the Northern Territory of Australia, is Australia's largest undeveloped gold project. We believe that Australia is a great jurisdiction. It's a Tier 1 mining jurisdiction, and the Northern Territory is very well ranked. This is a brownfields project, as you'll see in just a moment. It was operated previously, and as a result, we enjoy great infrastructure. We believe that this is a future world-class gold mine with proven and probable reserves of 5.8 million ounces of gold. The project is designed to be able to produce almost 500,000 ounces of gold per year over the first 5 years, with lowest quartile in-country and global all-in sustaining costs. There's tremendous upside to this project, not only on an economic basis with the leverage that we enjoy to the price of gold, but also with the potential to expand the mine life. And we'll talk a little bit more about that potential. We have invested a little over $100 million since acquiring this project in 2006. And with that investment, we have de-risked the project and believe it is now partner ready. We've completed extensive metallurgical testing and optimization programs, obtained the major environmental permits, and are now working on the mine operating permit. And we have ongoing engagement with companies that we believe could be potential joint venture partners. Social and environmental issues are very important to us. As I indicated, all of our major environmental permits have already been approved. We have excellent relations with local stakeholders and the government. And we have a track record of environmental leadership in the territory. We believe that there's tremendous upside in Vista Gold. The values are compelling. We think that there's a tremendous opportunity to see the value increase as we execute our strategy to create shareholder value. I will talk about that strategy at the end of the presentation. So let me start with the project. This is a brownfield project, and as you see in the map on the left-hand side, it's located in the Northern Territory of Australia, about 250 kilometers southeast of the capital and port city of Darwin. We're 30 minutes from Catherine, 45 minutes from Pine Creek, and believe that most of our employees for the project will live in these two communities. Not only are we close to a regional population center, being Catherine, but with only being 250 kilometers from Darwin, we have access to key suppliers and other skilled trades as needed. Some of the infrastructure that we enjoy as a result of this being a brownfield site, as you'll see in just a moment, is that we enjoy paved roads from the Stewart Highway all the way to the plant site. There's a natural gas pipeline that was built and used by previous owners of the project that will allow us, with the construction of a new power plant, to be able to supply our project with power for about 25% of what we could buy it from the grid. Now we do have or rather a power line from the site to the main grid, and so we already have power lines. As you see in this next picture, there's a freshwater storage reservoir already constructed. We'll raise the dam on that to increase its capacity. There's a tailings storage facility that has capacity for roughly the first third of the stated reserves of the project. And the civil works at the plant site, which we will reuse, are essentially complete. This is a well-advanced project and shovel-ready. As I indicated, all of the permits, both our environmental impact statement and the federal authorization required under the Environmental Protection and Biodiversity Conservation Act, have already been approved. All of the engineering for the project is at feasibility study levels, except for the piping, electrical, and instrumentation designs in the plant. As a result, we enjoy a very favorable development schedule. We can move forward very quickly and expect that with a partner that we would be able to achieve construction and start commercial operations within 2 years of that start. In addition to the infrastructure that I talked about, you see what the plant site or the project area looks like. The deposit itself underlies the Batman pit. This photo is a little dated. The water level in the Batman pit has dropped by over 23 meters since this was taken, and we believe that we'll have the pit dewatered by mid-year this year. You see some of the production statistics and reserve and resource information on the right. I'll not read that to you, but I will refer to it. I think it would be appropriate to emphasize our commitment, and that's a long-standing commitment to environmental, social, and governance issues. We have always been committed to environmental best practices. This has resulted in our track record of improving environmental conditions at the site and protecting the water quality in the Edith River. We've conducted a very successful water management and water treatment program at the site. We inherited a situation where the existing waste rock dump is generating acid rock drainage. We have dealt with that. We've developed water treatment practices and protocols that have allowed us to earn the spot as one of the recommended mine sites by the Northern Territory Environmental Protection Agency for others who face similar challenges. As I indicated, we've obtained the major environmental permits for the project. We've worked with both the Northern Territory Environmental Protection Agency in the approval of the EIS, as well as the Australian Commonwealth Department of Environment and Energy in the approval of our authorizations related to the Environmental Protection and Biodiversity Conservation Act. We take our social license very seriously, and we believe that we've built a very strong social license, working successfully with members of the community, territory and regional government, as well as with the Jawoyn Aboriginal people, who we have consulted with and kept involved in project planning. Recently, we announced that we had modernized our agreement with the Jawoyn Aboriginal Association Corporation, and they now retain a gross proceeds royalty that varies between 1 1/8 and 3% depending on gold price and foreign exchange rates. In our period of time of owning and working to advance Mount Todd, which commenced in 2006, we've optimized the flow sheet, implementing proven technology. This has allowed us to develop a flow sheet which is more energy efficient and which has allowed us to increase the gold recovery. In 2013, we estimated a gold recovery of 81.7%. Today, that's estimated to be 91.9%. We've conducted extensive metallurgical testing, commencing in 2007, the last testing being completed in 2019. We've addressed the issues that related to previous operations. We've reduced the grind size with milling equipment that we have conducted extensive testing with, which is both energy efficient and has allowed us to increase the gold recovery. We've been engaged with a number of specialized vendors in each of the areas of the process flow sheet and feel that we have selected the appropriate equipment. Some of the optimizations that we've made to the project include the inclusion of ore sorting technology. Automated sorting technology touches every aspect of our lives, and we as an industry are slowly coming to accept this. We have completed extensive testing and have concluded that the implementation of an ore sorting circuit will allow us to remove 10% of the run-of-mine material before it gets to the grinding circuit, allowing us to achieve lower costs in our grinding, leaching, and tailings handling installations. We've completed extensive drilling, having drilled almost 60,000 meters to, first of all, triple the resource at Mount Todd, but second of all, to better understand the mineralogy of the deposit, which has allowed us to make better metallurgical decisions. And as I mentioned, we've included a fine grinding circuit, which has allowed us to more efficiently produce a finer grind size and improve the gold recovery. 2019, we published a preliminary feasibility study. You see the amended results of that study on the slide in front of us. I would draw your attention to the average annual gold production of 495,000 ounces per year over the first 5 years with a life of mine average of 413,000 ounces. You see the cash costs estimated to be $575 an ounce for the first 5 years and $645 life of mine, and all-in sustaining costs of $688 for the first 5 years and $746 for the life of mine. Our initial CapEx is estimated to be $826 million to construct a project that has capacity to process 50,000 tons per day. This is a large project with large production. When we compare our capital expenditure and the efficiency of the use of that capital to other projects, we see that it's a very efficient use of our capital. We recognize it's a large number, and that's part of the reason why we're seeking a partner and not planning to develop this project ourselves. You see the project economics at the bottom of the slide. At today's gold price of approximately $1,850 and current foreign exchange rate, you see that the after-tax NPV5 is approximately $1.7 billion with an IRR of 38.5%. We've been able to achieve this as a result of the optimization work that we've done in the redesign of the grinding circuit. We continue to review and seek opportunities to advance and optimize the project. We've used consultants who are industry-leading specialists in their respective disciplines. You see some of those represented, and I'm sure you'll recognize those names in the lower right of the screen. In addition, we think that there's many other opportunities to enhance the value of the project, including the opportunity to convert resources to reserves. Executing a long-term natural gas contract will allow us to lower the already very reasonable power costs that we face. In addition, we can add resources and reserves at the Quigley's deposit. Another close-in regional district potential that I'll talk about here in just a moment. We enjoy significant leverage. I'm going to show you a slide here in a few moments that shows our leverage to the gold price that's exhibited in our share price. But the chart on the left shows the leverage that we enjoy at the project level. You see that for every $100 change in the gold price, that the economics of the project improve by almost $200 million. We're not aware of any other project in the development stage that exhibits this kind of leverage to the gold price. You see some of the things that were incorporated into the 2019 PFS on the right side of the screen. I've talked about most of these. I would just draw your attention to the one at the very bottom, that we have modified the planned construction schedule to be less optimistic. We believe that at 24 months is very achievable. And we've added a 6-month commissioning and ramp-up schedule in our economic evaluations. We believe that this is very reasonable and prudent and accurately represents the performance that we'll achieve. All of this rolls together and allows us to plan a project that compared to our Australian peers, as we indicated at the very start, would make Mount Todd the 6th largest gold producer in the country, with lowest quartile all-in sustaining costs. This truly is a world-class operation that we hope to bring to fruition with a partner. To just kind of set the stage, it's big in Australia, but it's big on a global basis as well. Obviously, we've not included Seabridge and Nova Gold's projects, which are substantially larger than Mount Todd, but they also come with a capex that's considerably larger, both estimated to be over $5 billion. We are one of the largest development projects out there. So let's talk about exploration potential for a moment. We own and control over 1,500 square kilometers of exploration licenses. But more importantly, you see an area within the mining licenses shown in the chart in the upper right. Within this, within the boundaries of the mining license, you see the south end of a structural corridor, the Batman Driffield Trend, that is mineralized and known to be the host to a number of different gold occurrences. We have tremendous near-term opportunity within this portion of the Batman Driffield Trend. If we just look at the 5.4 kilometer portion of it that's located within the mining license, you see in the plan map on the right that there are a number of already identified gold occurrences. If we look at the section at the bottom of the slide, you see that most of the historic drilling and most of the drilling that's north of the Batman deposit, or to the right of it in this section, is historic drilling. It was drilled by either rotary air blast, reverse circulation, or churn drilling methods with only a few core holes. Most of these holes were drilled very shallow, less than 100 meters in depth. When we acquired the project in 2006, the drilling at the Batman deposit looked quite a bit like what you see in the area of Quigley's, with very little deep drilling. In fact, I would note that most of the deep drilling here at Quigley's is drilling that we've conducted. At the Batman deposit, we've completed over 60,000 meters of deep drilling, and that allowed us to triple the resource. We now believe, as a result of the work that we've completed in the passing years, that the continuity of gold mineralization within the Batman Driffield Trend north of the Batman deposit is much more continuous than previous companies and previous owners thought. As a result, we've initiated drilling programs to begin to test that continuity. We've announced initial results and expect to announce the results of the most recently completed holes in the coming days. In addition to the area within the mining license that you see as that red box in the lower part of the screen, we control over 1,500 square kilometers of exploration licenses that host the continuation of the Batman Driffield Trend and also another trend farther north called the Cullen Australis Trend. There are a number of gold occurrences that we have identified. Some are advanced targets, such as the Quigley's deposit, the Wandy IOCG target, Golden Eye, which hosts a sheeted vein style of mineralization very similar to the Batman deposit, and then the Gulf and Tullis targets that are actually very close into to the Batman deposit. And then there's some very early stage targets that are scattered across the exploration licenses. We believe that these represent tremendous opportunity to increase the resource and ultimately extend the mine life of the project. Now, I indicated we've got some drilling going on. We announced the results of the first hole in December. We've completed the next section of drill holes 2, 3, and 4, and we'll be announcing those results in the coming days. We expect to wrap up this 2,400 meter drill program sometime before the end of February, and then we intend to commence a follow-on drill program that will be targeting more drilling along the structural trend between the Batman deposit and the Quigley's deposit to demonstrate the continuity. Let me talk for a moment about current initiatives and upcoming catalysts, things that I think that you as potential investors should be aware of and also watching for and following. First of all is the mine operating permit. We've been working with the Northern Territory Division of Mines to gain final approval of our mine management plan, and now believe that will happen in the very near future. We've talked about the drilling, and there will be additional drilling following the program that I just described. Late last year, we completed some geotechnical drilling in the area of the proposed plant site. This will allow us to complete the foundation designs and to it'll result in a modest change in the capex of the project, perhaps something on the order of $4 to $7 million, as the present foundation designs are very conservative. The water management program I alluded to, you see in the pictures in the middle of this slide, a picture of what the pit looked like in 2014 and what it looked like in December. We expect to have the pit essentially dewatered by the middle of this year, in preparation for the activities which will ultimately come to advance the project. Last of all, in this idea of optimization and extending the life of the project, our presently stated reserves are based on mine plans completed at a $1,000 gold price, a price that was very appropriate at a $1,350 gold price. But today at $1,850, $1,000 gold price used for mine planning is very conservative. We are presently beginning the work to assess the impact of raising the gold price. What that will do is it'll increase the reserves, increase the mine life, with only a modest change in the life of mine grade of average grade of the deposit. Having said all of this, we think that Vista is one of the stocks that you need to own in this new gold bull market. The chart in front of you shows our share price performance relative to our peers as represented by the XAU and the GDXJ over the period of time commencing November 13th, 2018, when the present bull market, gold bull market commenced. And these are share prices relative to changes in the price of gold. What you see is that with the exception of some tax loss selling the end of 2019 and obviously the impact that the COVID-19 pandemic had last spring, that we generally outperform our peers and that our share price responds more rapidly and rises more quickly with changes in the gold price. Now we talked about valuation compared to our peers. In these two charts, you see that on an enterprise value per resource basis and price per NAV basis, that we trade below the average of our peers. We have great plans to change this, and I'll lay that out for you in just a moment. But I think what it says to you is that if we're able to execute on our strategy, that there's tremendous opportunity to see an improvement in the value and to see the value of an investment in Vista Gold increase substantially. So why invest in Vista Gold? Well, we've talked about catalysts, and we've talked about the things that are upcoming. Most importantly will be the approval of the mine management plan, the equivalent of a mine operating permit here in North America. With that approval, we will hold approvals for all of the major permits for the development of the project. You'll see some results for drilling programs. We are presently working and in conversations with companies who we believe would make good joint venture partners. They've signed confidentiality agreements and are conducting due diligence, and we're having initial discussions. We believe that entering into a transaction, a joint venture for the development of the Mount Todd project will be an event which recognizes and helps crystallize the value that we see in the Mount Todd project. Now, you look at the chart on the right, there's just a number of things that I think should be reasons that you would consider an investment in Mount Todd. If we start on the left, it's in a tier 1 mining jurisdiction. Australia is a great place to work. We just recently talked about the value compared to where we stand compared to our peers and the tremendous upside opportunity that exists as we execute on our strategy. I've laid out for you where we're at with our environmental approvals and our commitment to social ideals and the work that we're doing with the community and the Jawoyn. We have at the project level tremendous leverage to the rising gold price. And we believe that with the political environment that we face here, that we will see the gold price rise. We've talked about exploration upside and the tremendous opportunity that we have to increase resources and at some point in the future to convert those resources to reserves. Last of all, I would just point out and remind you that we've made a significant investment in Mount Todd, that the project is de-risked, and with the approval of the mine management plan, that will be the crowning jewel. And as such, we believe that the project is partner level, partner ready, and we are in discussions with a number of companies who we believe would be outstanding partners. So what is our strategy? Our vision is to create greater value for shareholders through the achievement of a valuation that's reflective of the size, location, and stage of development of the Mount Todd project. It's important to us that we preserve maximum project ownership for our shareholders and minimize dilution for Vista shareholders as we move forward. We believe that from the point of a signing or announcing a transaction, that we could be in a position to announce first pour within 3 years. Now this vision is based on the strength of the asset. It's located in a Tier 1 jurisdiction, 5.85 million ounces of proven and probable reserves. We've talked about the annual production of 495,000 ounces with the life of mine all-in sustaining costs of $745 an ounce. We've talked about the economics at today's gold price of an NPV of approximately $1.7 billion and an IRR of 38.5%. All of our major environmental permits are already approved. Our social license is firmly approved. Now the strategy, the way that we create value is in the near term to continue to de-risk and add value. And obviously the keystone of that is getting the mine management approved. But the second part of it is the longer term picture, and that's bringing in a strategic partner who will appropriately value the project and pay an appropriate value for the interest to be acquired. We intend to build on our environmental and social achievements and continue to be a leader in these areas. And we are committed to narrowing the gap between our market cap and our project NPV. And we believe that the key to that is bringing in the appropriate partner to advance the project. I hope that with this you understand the opportunity that exists here and how we intend to crystallize that value and lock in value for our shareholders. I'd be happy now to take questions from those of you who are participating in the conference, and happy to talk about the project.
Reichman, the Senior Research Analyst who covers the mining and metals sector for Noble Capital Markets. I want to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So Fred, the first question is asking for greater specificity with respect to final approval of the mining management plan. You mentioned near term. Could you maybe speak to kind of what's been the holdup and maybe a little more detail on your expectations on the timing?
Yeah, we've been working very closely with the Northern Territory Division of Mines to gain this approval. I don't know that there's been a hang-up other than the Northern Territory is a small place, population-wise, very large geographically. The Division of Mines a lot of work on their plate and they're understaffed, and we've received a number of requests over the last quarter asking us for independent third-party assessments of the work that we've completed. We have provided the information for all of those requests. The Minister of Mines of the Northern Territory went on record publicly, unprovoked by us in late November, saying that the Mount Todd mine management plan would be approved in the near future. I had a conversation with her just before Christmas, and she indicated to me that while she wasn't able to commit to a date, that the division staff is working diligently on this approval, and that they recognize the value of the project. We're hopeful that that approval comes in the coming 4 to 6 weeks, 8 weeks. I'm hopeful that it's not months that we're waiting yet. The most recent communication that we received from the department was some follow-up questions in their final review of the mine management plan. So we're very optimistic that when we say near future, that we're talking weeks, not months. And I believe it's a matter of when, not if.
Well, that's certainly a big milestone. The second question is asking about the modernized agreement with the Gowan Association, and is asking whether the modernized agreement has helped broaden the appeal of the project to potential JV partners. And I guess, it moved from what, a 10% JV interest to a gross production royalty.
Yeah, absolutely. Our original agreement with the Gowan Association was signed in 2006, and at that point, they, as you alluded to, they were granted the opportunity or the right to become a 10% participating partner in the project. They're risk averse. They really have no interest in being a partner in the operation of the project. But with this modernized agreement, we have granted to them an additional royalty. As I indicated, they now have the opportunity to receive a royalty that varies between 1 1/8 to 3%, depending on the gold price and the foreign exchange rate. We've agreed to the formation of a leaders forum, which will give them the opportunity to have a more direct line and understanding of what's going on with the development of the project. We have jointly addressed and committed to measures that will protect cultural resources. We definitely don't want to have a resource or a repeat of what happened in Western Australia at Mount Todd. We've also agreed to programs that will ensure employment opportunities and opportunities to create small businesses within and run and owned by Aboriginal people, as well as commitment to training to make sure that everybody who works on the mine site is aware of and respectful of the cultural differences that exist between us.
The next question is addressing the, I guess really the resource base, talking about that the mine, will produce close to 500,000 ounces a year. The proven and probable reserves are about 5.9 million. And you mentioned earlier in your conversation about, or in the presentation about looking to extend the mine life. So what do you have in mind there in terms of kind of a target for proven and probable?
Well, so right now the mine life is 13 and a half years, and with a combination of changes in the mine plan resulting from using a gold price that's more appropriate for today's gold price environment, that change in and of itself would probably increase the proven and probable reserves to over 7 million ounces. With the exploration potential that we're starting to realize, we believe that there's an opportunity to extend the mine life to over 20 years. And that's not even touching, potential on the exploration licenses. That's just the inclusion of the Quigley's resource and other things that we see between Quigley's and the Batman deposits.
And, certainly you've had ongoing engagement with potential JV partners. So what's been the feedback? And I mean, would you say that, there's some pretty specific items to accomplish, or, when you look at your perceived, discount to the market, are there just a narrow set of variables that will change that?
Well, certainly having the last major authorization in hand will be a significant achievement for us. We've signed a number of confidentiality agreements, and on the technical side of it, the companies that have been conducting due diligence have been very pleased with the level of work that's been completed so far. As you alluded, modernizing our agreement with the Jowan Association has been a very, very positive thing. Some of the challenges we face are just and not really related to the process, but the fact that Mount Todd operated previously was operated by two different companies. First of all, Billiton Zapopan, who operated as a heap leach operation. Subsequently, Pegasus operated as a milling operation, but did so at a time when the price of gold was falling and had some problems, some challenges that they faced in their crushing circuit. That's drawn close scrutiny. I believe that everybody recognizes that the crushing circuit that we've designed is very robust and uses the appropriate technology. The capital cost of the project, relative to our market cap, has been one of those things that has significantly impacted our market cap. And there's the concern that we're going to go out and build this on our own. And certainly the reason that we're talking to potential partners is because we have no intention of building this ourselves. So, our discussions with partners have generally been very positive, and in many aspects, some have found that we're farther down the curve on understanding technology such as ore sorting than they are, and they've learned a great deal from what they've gathered from us.
And then just lastly, I happened to catch in your presentation about the potential monetization of non-core assets, and I was just wanted to give you an opportunity to address that.
Yeah, absolutely. We don't raise money very often. The last time we went to the market was 2016. We've been able to fund a lot of our activities through the monetization of non-core assets. Those who follow Vista would have realized that just last week we announced that we received a $1.1 million payment as part of the last payments related to the acquisition of the Guadalupe de los Reyes project in Mexico. There's another payment that's due to us in July of this year. We have another, and that's $1 million payment. We have another payment that's due in April to us for the payment to buy out the second half of a royalty on a project in Indonesia that we own, and that'll be a $2.5 million payment. So we have some other things that are providing cash in the door to Vista, and that all translates into this notion that we have worked very hard to keep our total number of shares issued and outstanding at a very, very low number. I mean, having just over 100 million shares issued and outstanding provides tremendous leverage for our shareholders as we execute on our strategy. Increases in value will be very quickly rewarded and realized by shareholders because of the capital structure.
Well, Fred, I think that's about all the time we have. Thank you so much for joining us.
Well, thank you for having us. It's been a delight, and certainly if there are those who would like further information, please reach out to us. Pam Sully will be happy to take your call, and as needed, she'll get me or John Roselle, our Senior Vice President, involved, and we'll be happy to spend more time with you.